Hi. So Warren Buffett today released his annual report, which includes his famous annual shareholder letter. I think a lot of people don't really understand that Warren Buffett, one of the richest men in the world, has failed numerous times, but he's been able to get back up because of what's called the insurance float. In other words, all those premiums that get paid into the system or the company that are not yet in a position to be paid out because either the number of catastrophes didn't occur that year or some other contingency just didn't happen, which then gives Warren Buffett's companies an opportunity to invest that money in cash producing businesses that generate even more cash. So when you look at Warren Buffett and you look at the fact that he avoided a lot of the money losing companies in the tech bubble of the 1990s, what was really happening there is that the nature of his business required companies that were essentially value companies, right? Companies that produced cash flow. And, Amazon, of course, didn't show a profit for quite some time, and so on and so forth. So, when you study these things, what does this have to do with travel? I think a lot of people don't realize how much debt is linked to the economy. Most people know that the federal government runs anywhere from $1 trillion to $2 trillion deficit every single year these days in the year 2021. But a lot of people don't realize how much the private sector is in debt, and those numbers are equally shocking. And so, again, what does this have to do with overseas and travel? Well, a couple things. Number one, you've got, the rise of, I'm not going to call them copycat companies, but the rise of companies that have stepped in to battle the inconsistency of small businesses overseas. So you have a company like Mercado Libre, and that's apparently doing well in Mexico and in South America. And you ask yourself, you've got a situation where Mexico is a very diverse terrain. It's not easy to deliver products all over Mexico in the same way as it would be in the United States, which has had in many years a strong federal government that has produced things like a national highway system that's consistent and that can be linked to a consistent GPS system. Mexico doesn't necessarily have a way of sort of self-funding those kinds of enterprises. And in fact, Mercado Libre, I believe, is based in Argentina, which is where a lot of the post-World War II German scientists might have gone to, or maybe might have gone to in order to escape persecution or whatnot. Now, you've got so considering that, if you go to a small business like a cafe in Mexico, a lot of these businesses are family run. So if there's a medical emergency, Google Maps might tell you that this business is open at, say, 12 p.m. You show up and it's not open at 12 p.m. So you don't go there again because it's inconsistent. And as somebody who's from a developed country, it does seem almost like an affront, personal affront, when you go to a business that's advertising a certain time and you just wasted either an Uber or a Grab fare just trying to get there to check out this place that had beautiful photos online. And of course, some cafes really, in the U.S., Starbucks probably opens at about 9 a.m. But overseas, because of different obligations, you've got companies that open up at various times. Whereas if you go to a downtown area, most of those shops open up at about the same time, either 8, 9, or 10. So if I walk into the downtown of my neighborhood, that all those shops will be open at 10 a.m., notwithstanding the current pandemic. Now, you don't know that when you go to a foreign country. Because it's more independent, there's more inconsistency. And that's led the way, that's allowed an opening for a lot of companies to come in. That's also happened in the U.S., by the way. It's not something that's unique to, other countries, to developing countries. And of course, that explains the rise of Amazon. If you have too much inconsistency in terms of service and whatnot, that always gives rise to the potential for competition. But one thing you have to understand is that the United States, because of its debt, because of its insurance system, which underlines or underpins its banking system, is able to make mistakes and recover and get better incrementally. Whereas in another country, if you don't have, say, a bankruptcy system that makes sense, if you don't have a bank making good loans, you obviously are not going to have the ability to create a decent or sustainable insurance system, which then means you can't make those infrastructure investments in the digital banking system. So it's not a surprise that when you talk about digital payments platforms today, you're really talking about the major countries, right? You're talking about China and Alipay. You're talking about the United States, PayPal, and a lot of competition as well from smaller players too. And again, it's not a coincidence that you're not downloading an app that with a Mexican banking system on your iPhone. That all has to do with a lot of different factors, including just the fact that because of colonization, the history of a lot of these countries involves foreign investment under coercive terms. So we talked about Mexico. The history of Mexico in a nutshell is European powers, especially Catholic Spain, coming in, stealing a lot of the silver from Guanajuato and Taxco, sending it back to the Queen. And the Queen, of course, is under a royal structure that's parallel to the Catholic papal supremacy structure. It's not a coincidence. It's done that way because if you take out the king, the background, the other shadow government is still in effect. And so what ends up happening in a lot of these colonized countries is that there's a backlash because you've got concentration of power, you've got things that don't work, and the government becomes weaker and weaker. And so there's a backlash in Mexico. At one point, the Catholic Church's properties were taken away, were confiscated by the government. But the government had to eventually, give it back because things weren't working. In other words, the government would take over these businesses and wouldn't know how to run, say, a hospital or a construction company. And, you can see that there's always been this sort of, battle between, private sector and public sector in terms of who gets to influence the culture, but especially who gets to influence the banking system and the money flows into that country in order to establish influence. And if you notice with the Catholic Church, not only do they have a tax exemption, but if the whole world were hit by some sort of electromagnetic pulse that wiped out the ability to communicate electronically, you want to think about what businesses you would still need to function, and a lot of those businesses could be done not as well, but still could be done in a rudimentary way, just not using electronics. And so those would be, of course, construction, hospitals, and education. You would still need all those things, like funeral services and so on. So really, you've got real estate, hospitals, and you've got education. And those happen to be the businesses that the Catholic Church tends to be involved in while getting a tax exemption. So you look at all these things, it's battle for power all over the world. And what it really is a battle for, the right to bring in your own currency under your own legal terms, and which, of course, tie into your financial system, which, of course, tie into the ability to provide insurance that allows people like Warren Buffett to make mistakes, buy up businesses that maybe are not worth as much as he thought they were worth when he bought them, and still get up and go for another round. And a lot of countries, in fact, in most countries, you can't do that. And that has to do not only with the history of colonization, but just the way that these countries have treated their banking systems. And you can see that technology plays a large part because you have to gather that data. If you control the electronic conduits, payment systems, you're not going to be able to get a full picture because of the black market. But you're still going to be able to get a decent picture that allows you to provide a reasonable insurance quote that then creates the investment pool for someone like Warren Buffett to be a philanthropist and to make money and to reinvest that money. So what does this have to do with travel? One thing I've heard when I have traveled is that a lot of people from developed countries, when they go to that cafe that's not open at 12 p.m. like it says on Google Maps, a lot of them have the tendency to cast aspersions on the work ethic of the people in that developing country. And you have to realize that that is part of it. The work ethic may not necessarily be the same, but that has to do with an underdeveloped banking sector. And quite frankly, a government that finds it easier to latch itself on to a foreign government's satellite systems rather than create that industry from the ground up. And one of the reasons that a lot of these countries can't do that is because they can't print currency. They can't just issue debt, millions of dollars of debt, billions of dollars of debt. Somebody has to buy that debt. And you can see again that the United States has an interesting system because a lot of that debt goes into housing. And that's important because nobody would buy a house. In other words, if they didn't think the housing values would go up. Because you have to borrow money and you have to pay taxes on that money. And once again, that creates, in some sense, a financial flywheel that allows reinvesting and that allows the insurance company to come in and do its job when some part of that system fails. With respect to traveling and the perception of the work ethic, you have to understand that if you live in a country that without a good banking system, not only are they not going to be able to pay you a lot of interest on your money, although they in most cases have to in order to attract investments, because precisely they don't have that stable economic system because it's not linked to a stable financial system because of its lack of insurance power, I guess you could say. And so even though they're offering fairly reasonable rates, you have to understand that there is a potential for that foreign bank to go bankrupt or to lock down your money. That happened in some other countries. I believe one of them was Cyprus. We've had that situation in the U.S. as well. We had it not 200 years ago. We had it about 100 years ago. So it's not something that is unique to other countries. In order for people to save money, to get up out of their beds that day and go to their small business at 8 a.m., they have to think that money that they get from you can be put into a bank account and can buy more at some point in the future. So that only exists if you have the capacity to do things like create a banking system that elevates housing prices on a consistent basis every year. And people will say there's a limit, right? The houses here that might be worth $1 million, they can't, realistically speaking, be worth $5 million in 20 years. It's just not something that makes much sense. And you're going to lose a lot of the character of the neighborhood and so on and so forth. So you have these bubbles that get popped and then so on and so forth. But for our purposes here, the idea again is that if you live in a country without a good banking system, which means that they don't really have a good financial system or an insurance system that underpins all of that, what you're really looking at here is a system that encourages you to spend that dollar that you get or make immediately because you don't know whether or not the price of milk or the price of a hamburger or the price of a car will be lower or on sale at some point. So, in other words, that's inflation, but it's inflation in all the wrong ways. And so if you live in a country where you have a dollar in the bank, but the prices, and you're getting 5% on that dollar every year, but the prices at the supermarket are going up 10% a year, in part because you're indebted to countries like the United States in their currency, in the US dollar. And based on the United States policies, the amount of money that you are able to borrow, and then just quite frankly, the actual value of that money in terms of being able to pay it back, that changes, that fluctuates. That's basically the point behind FX. When you go to an ATM, you're getting a different, amount back based on your US dollar yesterday versus today. A lot of that is too complicated to get into now. I don't understand it fully either. But the point is that a lot of these countries, they don't have the independent power to set those rates. And so when you get a dollar, the idea would be that it actually makes more sense to spend that dollar. It's not going to be a dollar. We can say a peso, a lira, whatnot, right? Even Egypt, by the way, still uses a pound, which tells you that it was under a British financial system. They still haven't thrown off that yoke of colonial influence, or some might call it oppression. So before you lambaste somebody in a foreign country and you start talking about their work ethic, you have to understand that unless you had a stable banking system that guaranteed some incentive to save, not only because you have interest rates or you think that you can put that money and invest it in a stock or a bond that will get you more money in the future, it's also linked to the prices around you. And if you live in a country where prices are going up, or not even going up, but are unstable, it's difficult to not spend the money because you would have actually lost money by not spending it, in the sense that you would still have to buy money on essential items like food and clothing, transportation, and so on and so forth. So that's really the lesson today that I wanted to impart. And Warren Buffett has become a little bit almost overly patriotic over the last few years, which I think is a bit unfortunate, because it tells you that even someone as connected as Warren Buffett may not necessarily understand his own role in the financial system, in the sense that it really is a situation where you have to be a pillar of integrity, which he does understand, especially if you're in insurance, which is a business that is dedicated to policyholders and in some cases the shareholders. But the idea is you want to keep costs low so that you can serve the shareholders or the policyholders in a way that makes sense, that doesn't require premium inflation every single year, excessive inflation. And I have an insurance policy. It went up, I believe, 10% this year. It hadn't gone up at all for about 4 years. And then this year, there must have been some sort of mismanagement. Obviously, you've got the pandemic. And so whether or not those algorithms were flashing red, the fact of the matter is my premiums went up by about 10% suddenly. So, and I'm still going to pay it. The business is still going to get that money. It's still going to be able to reinvest that money. What I'm trying to say is that a lot of that confidence that you see from billionaires in this country is linked to colonial powers and their theft in the past, and quite frankly, corrupt governments overseas that just can't seem to do something like create an honest banking system, perhaps because they don't understand insurance. And in that sense, it does make sense to study someone like Warren Buffett, to try to figure out what is that secret formula. And China, to its credit, ended up buying a few portfolios within the United States, insurance portfolios, probably in order to understand those formulas that I just mentioned. So if a country as successful as China and as powerful as China is buying up American companies, small portfolios, in order to study the algorithms and the insurance process, it tells you just sort of the uphill climb that smaller countries have in front of them. But it doesn't mean that it can't be done. It doesn't mean that the people that you meet overseas don't have an equal work ethic. It simply means that their banking system, and therefore their insurance system, is not as developed as yours.